Hello, friends, and welcome to my YouTube channel Simply Stocks. And today I'm going to talk about a very different topic. I'm going to talk about some of the stocks that you need to avoid in this market meltdown so that you don't lose capital when the rise happens and you don't miss out on the rally that takes place. So let's understand what are those stocks. Let's get started. First of all, a disclaimer that this is not a stock recommendation, and people taking any position into any share that I talk about should do that with their own due diligence and research. And I'm not in favor or against any company that I talk about. Before I talk about those stocks, here's a small request that kindly support me through Patreon, and any help from you of $2 or more per month would help me a great deal in taking this channel on YouTube to a higher level and doing more research, and it motivates me to do more research and put in videos every day. Once I have more than 100 patrons, I'll start with an education course on investment for no additional cost on YouTube. Cannot start the join button as it requires around 30,000 subscribers, and I require capital to extend channel to a new level. Thanks a lot. Now about the criteria that I have selected in order to put in these stocks, because there are a plethora of stocks, thousands of stocks that need to be avoided, and there are very few stocks that you need to get into. So I have taken companies that have struggled in the last 3 years and 3 to 5 years. There has been low promoter holding and low FII DII holding. There have been high pledging of shares in these companies, and liquidity is extremely high. So it is not that the stocks are not in the market. What I mean by high liquidity is that a lot of companies have liquidated their shares. So the number of shares in the market have increased continuously for these companies. I have excluded many penny shares out of these, because if I would have put in all those penny shares together, the list could have just gone on and on. So I've excluded something like a GVK, GMR, Suzlon, anything of Rana Farms, many other stocks which you would think that are only 2 rupee, 3 rupee stock and all that. I have excluded all those stocks, and I have come up with this list, which are sound, which are companies which are listed, traded a lot, but yet they are having a lot of pledging and debt, and yet people get in the trap of buying into them. So I'm discussing those shares. So let's understand what are those shares. So these are the stocks. First of all, GMR Infrastructure, a loss of 304 crores reported this quarter. 64% promoter holding, which is good that there is high promoter holding, but 74% of that promoter holding is pledged. So you need to understand that when the prices go down and when the market is under pressure, these are the pledged shares that get taken out and get sold, and you have a spiral in which the pledged shares get sold and the stock goes even further down. And then if the stock is in futures and options, then there's more selling in terms of short selling, and then stock goes down even further, and then retail investors sell on panic selling, and that leads to the share even going further down. So that's why you need to avoid a stock like GMR Infrastructure. Max Financials, only 28% promoter holding, and 91% of that promoter holding is pledged. Although many mutual funds is invested into Max Financials, although Max Financials have produced decent results, and in the recent times the stock has moved up a lot, but you need to look at the fundamentals. See, we as retail investors have very little money to invest in compared to people who have a lot of money and who are HNIs, or who are large investors who invest crores of rupees every year. We invest just a few lakhs here and there and after our savings. So we need to be very vigilant in which stocks we invest in. So in Max Financials, with over 90% pledge, complete avoid on my behalf. Third one here on the list is Apollo Hospitals. Very good business, and the company is doing really well at the moment, and that's why the stock trades at quite a premium to other hospital stocks. But look at what is internally happening. 31% promoter holding, very low promoter holding, and 67% of the holding is pledged. A complete avoid. And I did recommend Apollo hospitals when I was talking about Fortis, but I take my word back on that behalf. When I was doing the research, I got to know this fact. So in this regard, this could happen on any day if the hospitals are overwhelmed with the cases of coronavirus, if there are other things that takes place and Apollo doesn't is not able to deal with it, then there is problem with the company, and once the stock starts falling, then the pledged shares will also get sold and the stock will fall even further. And as I talked about the spiral, it is a retail investors who are going to lose out. So if you have bought it, probably sell it on rise or on any time that you get a chance. If you have not bought it, then avoid the stock altogether. Jindal Steel and Power Limited, 42% promoter holding, 49% pledging. I have traded in this stock and made money. I have traded in this stock and lost money. Never invested in a stock in steel sector. Probably the best are Tata Steels and JSW Steel. Uh, so if you have Jindal Steel and Power for a long time, exit it. The steel sector is going through a turmoil altogether, and this stock will fall even more if this turmoil continues through China and everywhere else. And we are seeing what is happening with COVID-19 here in India. So this infrastructure space is going to find more trouble going forward, at least in the next 3 to 6 months. Um, don't get into steel companies which are having pledges and low promoter holding like JSPL. Get into something like a Tata Steel or JSW Steel. That would be a better option. Now the Torrent twins, interestingly, and I found that really surprising that the Torrent Power had 54% promoter holding, which is decent, but 49% of that holding is pledged along with a lot of debt. The company, and probably that is why the stock never did very well, although the company is into retail power production and everything else, and they were doing well on the sales front earlier, say 2 3 years back. Yet the stock did not do appreciably well as other power companies did. uh, so one needs to be very careful in this, that 49% pledges. My criteria is simple, that if you want to invest into any company, then you need to do it with a lot of due diligence, and in that company there should be no pledging, absolutely zero pledging, and that's how you get into that company. Otherwise, the company has to be very very good on the corporate governance front, like Nestle or HUL or Dabur, etc. With a little bit of pledge, that's fine. But mid or small cap company with any sort of pledges, even 0.5% pledges, is not quite my cup of tea. So in Torrent Power there is 54% promoter holding and 49% pledges with debt. Complete avoid. Even Torrent Pharmaceuticals, now this company was doing really well during the 2011 to 15 phase, and the stock did well, but after that the stock has dwindled down a lot over the last 4 5 years. 71% promoter holding, which is quite good and understandable that people would like it, but then 36 37% pledges, although not a huge and not that much as in say a Max Financial or an Apollo Hospital, but still 36 36.5% pledges tells you that compared to say other pharma companies in the same you can say sector, this is a hell lot of pledges. And we have seen what happened with Walk Hard with pledges. We have seen with other pharma companies in which there were pledges, and things really got bad whenever there was US FDA clamp down. So avoid Torrent Pharma as well along with Torrent Power. So let's understand after Torrent Twins, let's understand what are the other stocks that I have picked for you that need to be avoided and why that. So next in the list is Adani Port, and Adani Port has 62% promoter holding, but 32% of the holding is pledged. There is high debt on the company, and the business of port and shipping etc. is not doing that well as it was doing before 2017. Plus, there are issues with the company in businesses in Australia, etc. But if you consider that the market going down, whenever the market goes down big time, these are the companies that fall the most, the companies with high pledges. And whenever there is high liquidity, high risk environment, these are the companies that do well. And we as retail investors are very hard pressed to understand as to when the high risk environment comes and whenever the things really get bad. Because if I ask you that, did you ever thought that a market would go to 8600 from 12400 when the market was hovering around 12000? Did any one of you thought about the market going to 9000 or the small cap index going below 11000? None of us, even I did not think that that would happen. I thought 11,000, 10,700 would be the bottom, and we have seen it all now. So avoid these companies. If you're doing an SIP, if you're doing a job and you want to invest some sort of money in the stock market, these are very risky stocks to get into. So avoid Adani Port. NCC, another company, and probably this is the reason why the stock is not moving. 18% promoter holding, and 37% of that is pledged. Only 18% promoter holding, and this is a complete avoid. At least the promoter holding has to be greater than 30%, at least. And after that, you need to look at what is the level of FII and DII holding. For instance, in one of the companies I saw, and I don't remember the name, the promoter holding was 32%. Yet, I think it was Dixon, in which the promoter holding is in 30s. Yet, the DIIs and FIIs and combined with promoter, it comes down to 90%, 92%, and you have only 8% free float. So, you need to find out stocks or companies in which the combined holding has to be more than 80%. Those are the companies really to invest. Combined holdings of FII, DIIs, and promoter. In JSW Steel, which I thought is a very good company, but again 42% promoter holding and 49% pledge. So probably you can invest in something like a Tata Steel if you want to invest in some into the metal industry, or if you really want to invest in metal industry, go through the ancillary route and look at companies which make those metal pipes, etc., which would be in use even further whenever the industrialization takes place in a big way, whenever growth comes back in terms of infrastructure. uh, Adani Enterprises, another Adani Group stock, 75% promoter holding, very good, but 32% of it pledged. It should have been 0% pledging. Now, if the stock goes down big time, right now the stock is doing really well, Adani Enterprises, and that's why it looks, everything looks nice from the Adani Group point of view. Adani Gas, Adani Enterprises, all doing well. But you look at these pledging, I would suggest you avoid the whole group. Even if Adani Gas is not having that pledging, yet it will percolate down to them as well. You never know when the promoter thinks of different ways of getting out of some sort of pledging and taking out money from a profitable business. So that's why I avoid those groups altogether, which have pledges to that extent. And talking about the groups, one of them is the future group. uh, all future groups are pledged at the moment between 40 to 70%. We have future consumer with high pledges, around 60% or so. And we have seen what has happened with future consumer. I'm going to come up with a video on future consumer in a week's time. And we have seen the stock go from 5 rupees all the way to 78 rupees, and then come back all the way to 12 rupees. And we don't want such stocks. We don't want stocks that go up 20x and then comes down 90%. We want stocks which are compounders, which keep going up, which keep making 52-week highs, etc. And although future consumer was one of the you can say FMCG stocks and doing well on the ground, it looked like they were doing well on the ground, but the kind of debt that the company has, plus the amount of pledging, it's a complete avoid. Along with future life and other future group, future enterprises, future market networks, anything to do with future group, complete avoid the group itself. And you look at all the banks, I have added banks to it with all issues of liquidity and banks failing. Many banks will report NPAs and so kindly avoid. So these NPAs will be big, and we are talking about NPAs to be a past thing for the last 2 years, for the last 8 9 quarters, but it is not happening, and NPAs are swelling. We've seen what happened with Yes Bank. We have seen with NBFC companies like DHFL, etc. And this will just continue with what has happened with Yes Bank and what is happening with other banks, that people, that the government is trying to put in money from other banks into Yes Bank to save it. This is unprecedented, and the thing is, if that happens, then these banks, the other banks like HDFC Bank, ICICI Bank, or Kotak Mahindra, etc., who are putting in money into SBI, for instance, into Yes Bank, will become even weaker, because SBI itself has more than 1 lakh crore of bad loans in it. So it's kind of a mess, this banking and financial system. Kindly avoid it. We might not see the best of banks or finances going forward, and probably we have seen the best of this sector earlier. So kindly avoid banks as well. So what needs to be done? Avoid these at all levels. No matter if they go up 3 4x, just leave it. Don't look at them. There are many other companies to look at apart from the penny stocks or these stocks that I have talked about. There are many companies in different sectors that you can look at, be it IT, pharma, consumer durable, discretionary, etc. They will keep struggling unless the pledge goes to zero. So if pledging goes to zero, then you look at this company with a new light, or with a new eye. Otherwise, just avoid these and buy quality businesses which are growing 20 25%, 15 20% in difficult times, compounding annually, and have a long term view. So this was my video on some of the stocks to avoid. Please like and subscribe my channel and hit the bell icon so that you get my videos straight away when I post it. Thanks a lot for watching.